The economy is slowing down and even mainstream publications are admitting it. The stock market, however, is doing very well. It has been up as much as 30% in many cases. Risk is back on the table and investors are buying stocks hand over fist. Well, actually, they're selling. So how the heck are stocks rising? You came here for the truth, so let me unveil that for you. Today we are going to look at an issue that I have been covering for months now. It is not making its way into the mainstream financial understanding, unfortunately, but that's what we have to really dig into to understand, because we're not going to get it spoon-fed to us. I wanted to begin by looking at the markets. You can see that today they're in the red, but they have done very well over the last few months. There's no doubt about that. Some of these markets have come up as much as 30% from their lows, and here we are today seeing some negativity, but this is really just 1 or 2 days out of so many that have been in the positive. You don't need to worry, because according to Jim Cramer, these are, quote, terrific buying opportunities. That's the way it goes. He was actually recommending gold for a short period of time while the market was in a panic, and he quickly turned around and started to recommend stocks yet again. This is an issue that will not be brought up in the mainstream by people such as Jim Cramer. Cumulative flows to tech funds have stalled. You need to look at this chart. Look at what has happened. Throughout 2017 into 2018, this was looking very hot. And then we saw in the middle of 2018, they started to sell off, particularly September timeframe, and then that has weakened ever since. And it's still happening today. They are selling stocks, but we're watching the stock market. It's going higher. Many people don't care because this is the only thing they're looking at. They're not looking at the tech fund flows. They're not looking at the amount of money that has been leaving the stock market in search of safety, and instead they are simply looking at the price. They want to remain ignorant, but I, as well as you, do not think ignorance is bliss. Out of Bloomberg, FANG's $800 billion rally has mom and pop investors cashing out. You remember I just said that the retail investors are cashing out. So we had the investment institutions that have been cashing out. Now we have more information that even the mom and pops have been doing the same. After a 3-month rally that's added more than $800 billion to the value of the FANG stocks, individual investors have decided it's time to cash out of the high-flying names. Retail clients at brokerage TD Ameritrade increased their overall exposure to equity markets for a second consecutive March in month, yet they sold shares of Amazon, Facebook, Netflix, and Apple, all 4 members of the so-called FANG cohort. I've got more details in here. Well, I want to show you them looking at this. I wanted to show you this chart that's in connection with that. Goodbye FANG. Retail investors sell FANG stocks after strong outperformance. The white is Facebook, Amazon, Apple, and Netflix, just showing you how well they have performed since the bottom that we experienced in 2018. And then it has rocketed higher than the S&P 500. You could see the difference in between the two, even though the S&P has done very well. There's no doubt about that. This is all quite funny because this has been the worst start to the year for equity flows since 2008. You have to understand, that means that a lot of money is being pulled out of the stock market, and yet they are rising. It shouldn't be like this. It's the worst since the financial crisis, and of course, nobody really pays attention. Let's say the majority of people, they are not paying attention. They do not know who the EPFR is. They don't care. All they care about are their stocks rising. You can go into the comments section of this video and you will see the people who are simply yelling and screaming. They are triggered by this information and they don't like it. Well, this is the truth, and that's what we have to focus on. That doesn't mean that stocks cannot continuously go higher. It just means that the real reason they're doing so isn't what you believe. The chart on the left-hand side is equity fund flows continue to be relatively weak since the correction, and you could see the darkest blue line, which represents equities, and that has been slowly but surely declining on average. On the other hand, you've seen government bonds increasing, you've seen corporate increasing, as well as money markets. So we know where the money is going into, and we know where it's coming out of, but it's interesting to see how this entire stock market is riding on stock buybacks as well as central bank intervention, not on actual investors. Quite interesting to see it happening right now, the worst it's been since 2008, because they know this is the end of the cycle. Despite what we've heard from JP Morgan and others, there are cycles, they still exist, and we are near the end of one. Whether that means it's going to happen in 2 years or 10 years, I don't know how long they could stretch it out for, but I know that real investors have been leaving on average, and they're moving their money not into cash under the mattress, but they're simply leaving the equities that they received extremely good performance in over the last few years. And it doesn't mean they're selling all of their shares. It means they're selling some of their shares, they're taking some profits, and they're moving that money into what they believe is more safe. This is TD Ameritrade's Investor Movement Index, showing you the retail investors at this one particular company versus the S&P 500. The trend has been selling, absolutely selling. Now, in the short term, this has picked up a little bit. You can see it here. However, the trend has been downward for retail investors. This chart here breaks it all down from the beginning of 2011 up until present. You could see all the points that they've highlighted, and as conditions either got better or worsened, they are making notes here on this chart. There's a lot of information. If you're interested about that, you can check it out. But I wanted to touch on something first. I posted the chart about the tech flows yesterday on the community section of my channel, basically the blog area of my channel, and this is one of the top comments here. This person here finds it very funny that I've been promoting a crash, not sure exactly what that means, for apparently 3 years, not sure where that number comes from either. When it happens, he will be the genius saying, "I told you so." Both question marks and exclamation points, not sure why that's the case. Anyway, 56 people had decided to give it a thumbs up. So we have a lot of people who do agree with this. And that tells me something, that people, as I commented below, are simply wanting to remain ignorant to the truth. As long as stocks are going up, they don't care. All I was trying to show you in the chart was that investors are selling off of their tech stocks. That is a documented fact. The EPFR provides the data. People are suggesting that I am unaware of what's going on. They're making a lot of claims about this or that. I am showing the data directly from the sources. If they are unwilling to accept it, that's not my problem. I don't care. All I'm trying to show you is the information that's not going to be provided to you in the mainstream financial media, that your financial advisor is not going to show you. You do whatever you want with it. This information is the alternative news. If there is no alternative, then you will simply do whatever Jim Cramer tells you to do. Use it as a buying opportunity. But isn't it great to have some other alternative? Well, that's right. That's what I'm trying to provide. If you appreciate that, please give me a thumbs up. If you want to support me, you can thumbs up this video, thumbs up all the videos I do if you want to support the truth. If you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. I've got all the details, everything from the foundation, the history, the asset classes, how to make money, so much more, all at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to know the top 3 reasons why stocks have risen, click on this video and I will see you there.